Breaking news from Ottawa this morning, the Bank of Canada holding the overnight key lending rate at 2.25%. Now, in their release this morning, they cited no major changes or any updates since their last report. There is a lot of suggestions in their press release this morning about elevated uncertainty with the economy, unemployment, and with trade negotiations with the United States. They also expect the economy to grow by 1.1% in 2026. So let's dive a little bit deeper into this. In their statement this morning, the Bank of Canada suggested a cautionary hold with uncertainty about the effect of increased government infrastructure spending that won't have an effect on the Canadian economy until late 2026 or even early 2027. Certainly, Bank of Canada decisions are not the only factor in what increases or decreases the speed of the economy. This pause on interest rate adjustments was widely accepted by the market and most economists. Most forecasts had left the Bank of Canada rate unchanged, and it is unlikely that 2026 will see any major adjustments to the overnight lending rate. The central bank's statement and monetary policy report both suggest that the inflation rate is around the 2% target inflation rate. And although there are some stresses on the system, the economy is not collapsing altogether. And that's basically the primary driver behind the stay the course decision. Part of the Bank of Canada's decision relies on the job market. Tiff Macklem, in his press junket this morning, suggesting that unemployment remains relatively high, and especially youth unemployment remains very high. Now, additionally, job growth has softened, which is putting a bit of pressure on wage inflation. So given the high unemployment rates and the especially problematic youth unemployment rates, the Bank of Canada does not see a business case for raising rates in the moment. In other words, they do not see the economy growing and do not see a need to tighten the economy. Of course, one of the other main ingredients in the soup is trade and tariff uncertainty. Canada's economy is highly integrated with the United States, not just politically and culturally, but geographically. This means that threats of tariffs or actual tariff adjustments have a real and tangible impact. Multiple industries in Canada, including steel, lumber, and automotive manufacturing, have faced significant hits with the threat of tariffs. These tariff and protectionist measures from the United States can decrease Canada's export competitiveness, increase costs for the U.S. consumer, and produce slower growth in the Canadian economy overall. These uncertainties is another reason why the Bank of Canada is acting a little bit cautious right now. Now, one of the biggest question marks is the CUSMA negotiations that are happening later this year. Canada's Prime Minister has already suggested that these negotiations will be very robust, and Washington's protectionist philosophy will be part of those negotiations to be sure. The outcome of these negotiations and whether Canada still maintains some tariff-free access to the North American market could materially affect investment decisions, job growth, and future rate decisions. On one hand, a successful outcome of a CUSMA negotiation will probably lead to an expansion of the Canadian economy. And of course, unsuccessful negotiations are going to be the exact opposite. The demand for Canadian commodities and production will be reduced. Now you layer on the U.S. protectionist rare earth and critical minerals decision recently in November, and this could reduce Canada's export competitiveness on commodities as the U.S. looks towards domestic supply. Now here's another contextual issue that may be worth considering. Central banks around the world are no longer swimming in the same direction. The EU, for example, is struggling with lower inflation, while the US is dealing with higher sticky prices. And Japan, meanwhile, is mired in a shift out of the decades-long low inflationary period. This international monetary policy fragmentation makes it a little bit more difficult for the Bank of Canada to base its decisions on the decisions of other central banks. Each jurisdiction seems to be facing a more local and domestic challenge. And in terms of the US Federal Reserve, we're expecting their rate announcement later today. If central banks fail to adjust policy based on certain economic imbalances, the markets themselves will make an adjustment on their behalf. We call this bond market vigilantism, where bond markets, credit spreads, equity risk premiums, and exchange rates start moving in ways without formal policy. This interplay between fiscal activism and central bank monetary policy can create mixed signals for investors and entrepreneurs. Now, certainly the US Federal Reserve has come out publicly to say that they have many tools in the toolbox to fight against this bond vigilantism. At the same time, fiscal policy, which is decisions made by legislators or those in the House of Commons, is expanding rapidly into areas of the market once reserved for private markets. All in all, it should be interesting to see how the year plays out. Now, here's one deeper structural issue that I don't think a lot of people are talking about. As wealth and income equality has increased, economic demand becomes increasingly concentrated in the hands of a smaller group of individuals. The reliance of consumer spending as a key driver of economic growth may become a bit of an issue as less people have discretionary spending amounts in their budget during an inflationary environment. That alone will distort market signals, price dynamics, and complicates a way to measure inflation, which further muddies the waters for economists and bureaucrats trying to decipher the data. So what is the bottom line in today's decision by the Bank of Canada? It's a hold at 2.25%, reflecting a subdued economy facing the pressures of tariff and trade uncertainty. And additionally, higher unemployment than wanted and global policy distortions. Elevated employment and global policy dynamics are also a major factor in this decision today. If you found this video to be helpful in your discovery of politics, economics, financial literacy, history, and philosophy, make sure you like, subscribe, and hit the notification bell for upcoming videos.